In the Fund Focus section, we'll be looking at the top performing funds for the first 4 months of 2012. Now, just looking back at some of the categories that we had as top performers year to date, the small companies performed the best, up by 14.8%. And if you can see on that graph that we've also had financials which have been performing really well year to date. 14.4% return is what you're looking at there, and domestically, the domestic equity industrial index up by 9.5%. And of course, we know that resources have been the big underperformers, falling back for the first 4 months of the year. And I suppose it's all around the concerns around the slowdown in China. It's all around the fall off in commodity prices that has really hit the resources sector.
Yeah, I mean, and if you look at those longer term numbers, those kind of 2-3 year numbers, you'll see the markets have actually done quite well. So it's an absolute fallacy that you can't make money out of markets. Let's just maybe look at who the top performing managers were for the last 4 months. And there you can see them, Net Group Investment Entrepreneur Fund. There's Anthony Cedric's funds with Polaris Capital. Year-to-date return there at 20.4 with a 4-star Morningstar rating. The Investec Emerging Companies Fund, that's at 18.8% for the 4 months. That fund there is run by Neil Stewart Finlay. It's 1.3 billion rand small company fund. And then Net Group Investment Financials. And Koki Kweman needs absolutely no introduction with Sanlam Investment Management. You can see the rating also there, 5-star rating, which indicates those long-term numbers are certainly in place. I mean, that's an interesting mix. So you've got financials in there, you've got smaller companies in there. You know, it's quite an interesting mix, and it's quite. It's not always like that, you know. And I want to come back to what David said earlier on. It's not always going to be the case, you know.
It's not always going to be the case the banks run, but so far this year they extracted luckily, for example, the Net Group Investment Entrepreneur. That was a top performer because of the weighting towards financials and industrials. David, your view on the performance of the Net Group Industrials Entrepreneur Fund and why they did so well?
The short answer is it's a concentrated fund in the right space. I mean, if you're looking at a period like 4 months, you know, you just, that alone wouldn't be enough to derive any conclusions about luck versus skill. So you know, it's a small, it's an aggressive fund in the right place at the right time over that 4 month period.
Yeah.
David, just quickly, the definition of the benchmark that the managers that you benchmark the managers against, is that something that you decide, or is that something that the managers decide, or if you want to do your relative return kind of, or is it just peer group kind of performance at this stage?
Well, when we're evaluating a manager, it's a subjective decision by the analyst covering the fund and rating it. I mean, that's a big part of where, when you get into performance analytics, something that, you know, is largely considered a very quantitative exercise. That's a perfect example of where very qualitative decisions come into play, even though one might refer to that as, you know, the quantitative part of what we do. Picking a benchmark is quite subjective. You know, a manager will often say, you know, I believe this is my benchmark, and we'll often say, well, you know, I don't think that that's a perfect benchmark. I think this one's better. And or we'll look at the peer group. And in most cases, we're looking at both, the benchmark, whichever one we feel is most relevant, and the peer group. But from a database perspective, you know, we do record in our database the benchmark that the fund manager themselves have chosen. The problem is sometimes not all managers, you know, in our opinion, do a great job of selecting their benchmark.
Let's look at that table again, and I just want to show kind of what those returns look like again of the last 4 months. And I wrongly pointed out Anthony Cedric, actually the old business's name is Polaris. It's actually called Abax Capital now, and there you can see the return again at 20.4. I mean, Roland, this is classically kind of a traditional asset management business that's very, very specialist. So, you know, you're going to get great returns from this manager, but you're possibly going to get some bad returns as well, especially if you kind of benchmark cognizant at the end of the day. So kind of the long-term view here is very important.
Yeah, absolutely. But I do think that you have very cyclical kind of effects. For example, in bad times or volatile times, especially in 2011, we saw the stock market coming down. Small caps tend to do quite well in bear markets. So a fund like this will naturally do well when we enter in a bear market, not necessarily because of the skill of the manager, just because of the style of the fund. So we have to take that into account.
Yeah, let's look at I mean, that's interesting. Let's look at the drivers of performance for the specific fund. If you look at the table at the moment, you'll see what the drivers of performance were inside the Net Group Investment Entrepreneur Fund. You'll see there consumer discretionaries. You can see the return there for the 4 months. And you can see kind of, look at those, financials and industrials, those are all the big drivers. You'll see the total returns for those sectors on that side of the screen. You see the contributions to those on the other side. And the big stocks there that have made the big contributions, Mr. Price, Coronation, and Imperial Holdings. I mean, all big kind of retail focus, some specialist financial services, and then obviously industrials in the mix there. So big South African focus.
Let's take a look at the Investec Emerging Companies Fund, because as you say, small companies tend to do well in bear markets. Well, bear market, are we in that right now, volatile markets, because we have seen a positive return year to date. What are your thoughts on this fund, which is of course a 1.3 billion rand small mid-cap fund, that of course is the second best performer, David, and the fact that this is pretty large, I suppose, for a smaller cap fund?
Yeah, it's by far the biggest fund in its category. Interestingly, just sort of doing a sort of very superficial look, the fund doesn't seem to be showing too many signs of suffering from its large asset base. So some of the things that you can look at to help give you an idea of all that is how many holdings does it have? What's the average market cap of those holdings? A fund that is really bumping up against capacity constraints will usually have to start to increase the number of holdings because it just is too big to take large positions in a fewer number of stocks. And it'll usually have to increase the market cap of those holdings because the smaller ones are just too illiquid for it to enter and exit on a timely basis. And then, of course, you'd start to see over the longer term it start to affect the performance numbers. And there are no obvious signs of that at the moment.